Good morning, trading world. It is November 11, 2021, just after 8 a.m. I'd like to start off by saying Happy Veterans Day to all the veterans. Now, the title for today's pre-market is Warming Up, but Let Me Catch My Breath. For those of you who don't get it, it's a pun on basically market breadth or market strength. Let's get into today's trading and things that I see that are going on. Every day I come into the trading day trying to be objective. I am not a perma bull or a perma bear. I try to come in every day and trade just what I see. There are fundamental keys that make it hard not to lean toward a bearish bias. But on the way up, especially at these levels, fundamentals don't really matter. There are two stocks that have a chokehold on the market. That's Nvidia and Tesla. As Nvidia and Tesla goes, so goes the market. So the question is, can the irrational activity in these two stocks keep pace, or does it end with a massive unwinding? Right now, these two stocks unwound a bit and ran so far, so fast to the downside that they now have to catch their breath. In the title, the pun, market breath, is seeing how it had no bearing on the market. Or I should say the pun in the title is basically making fun of how market breadth or market strength had no bearing on the market. And what I mean by that, for those of you who track the AD line or market breadth, you saw that we had a very positive, at some points, AD line. However, the market was still down almost 0.8%. The reason for this is that when you have stocks that have a very large market cap with a volatility of over 75%, moving at a beta of 1.5 times the market, you get a condition where 450 out of the 500 stocks in the S&P could be moving up. But with these few stocks moving down, the market follows the few, giving us a misleading market breadth or market strength. So with that, and also noticing yesterday that we have a clear momentum change on the daily chart. That's right, the MACD signal has crossed, giving us a negative momentum on the daily chart. With all that being said, all these are keys to a bearish bias. And with all of that, I smell a bounce coming together. So let's get into today's scenarios. Today's going to be a rather interesting day because the ways that this range day could play out, we could be all over the place. So, let me get up the scenario number 1. All right, here we go with our first scenario that has a probability of 42% of happening today. We have a range day bias. In today's range day bias that could possibly happen, it could pretty much end with a bullish tilt to it. Looking at the way things are shaping up right now, our immediate resistance is going to be around the 465 area, and that's going to give us the reversal to come down toward the 463 area. And the reason that we're going to deem this a range day is because we're going to break below this area of 463 and dip below it. We're going to dip below that 463 area and possibly have a lower range, or establish a lower range somewhere around 462 to possibly the 461 area. And on a bigger picture, what this does, it establishes a double bottom for the moment with yesterday's low, giving us that springboard to kind of bounce briefly. So again, we get down to 462, 461 area and start to build a base, and we go try to find the high. And high, we get back around that 465 area and maybe chop around a bit and break through, getting us to the 466, 467 area. So that's how I see the range day going for us today. Again, this is the highest probability, what I will be foremost looking for. So that is scenario number 1. Let's get to scenario number 2. Scenario 2, we have our trend day up structure. And with this trend day up structure, we locate the close from yesterday, which was 463.62, and we revert back toward that close, but somewhere around that close we find support, and from that support we bounce up, getting us starting into our trend up. And once we're into our trend up, usually around mid-morning to midday, we usually find an area to just kind of chop and consolidate. And that's going to be somewhere between 465 and 466. To be a little more specific, between 465 and a half and 466 and 3/4. That's probably where we'll find that midday chop. And going into the second part of the day, on a trend day model, we usually get a slight pullback before resuming that uptrend. This scenario has a 38% probability of happening. So this is scenario number 2. And let's get to scenario number 3. All right, here we have scenario number 3, which will be a rounded reversal, or what I like to call a change day. We open up gaining momentum, which is usually called a gap and go. We open up and pretty much don't look back. We get somewhere to this 466, 467 area. We could possibly overshoot and find our midday chop. And remember, the key to identifying this type of day is usually the gap and go, but most importantly, once we reach our midday chop, the divergence on your indicator. While this is going up, almost immediately or just after cash open, we start a divergence toward the downside. And it becomes even more clear during the chop where we continue to trend down on the indicator or the internal, whichever you use, giving us a signal that later on this drop is coming. So those are the scenarios for today. Like I said before, the inefficiency of the options market to price risk has a big effect of me being able to see the probabilities in the scenarios clearly. So today I'll be planning more so, or on the lookout more so, for any of the 3 scenarios, because right now the market is showing itself to be very inefficient. So you have to stay on your toes and kind of look for any and all scenarios. So with that being said, always know your risk. Wishing you a successful day of trading. Have a great one.